Hey everybody, and welcome to the live show here at Klaus Team. And we've got with us from the Klaus Team, myself, Scott Goyman. We've got Craig Klaus and Twyla Edwards, our two specialists for 85212 and 85209. Welcome to both of you. And we've got Steve from Unity Home Loans. So how's everybody doing tonight?
Incredibly great. I'm glad to be watching this and not other things.
What other thing? Is there anything else going on tonight?
I don't know. Is there, Steve?
Two adults calling each other names on a live stage. That's all I've seen so far.
We'll behave better than that, right?
Yeah. Yes.
So as we're on here, as we're on the live stream, if you are on Facebook, if you are on YouTube, please take a chance to dive into the comments. And if there's something that you want to make sure that we have answered tonight, just type it in there. We will see it, and we will respond to those and answer those throughout our time here. We've got a couple things that we will be covering as we go through here. And but yeah, type those in, and we will see those. So, Steve, you want to talk to this?
Yeah, I mean, this is really just kind of to kind of set the tone for our meeting today. Is really just taking advice. I mean, we always like to know where our clients, our communities, people we talk to, like, where do you turn when it comes to mortgage or buying or selling a home? I mean, do you go to the media? And unfortunately, members of the media, they're not experts on every topic, and a lot of times they're just reading the headlines or trying to get clicks or eyeballs, so to say. Do you go to the internet and do a Google search, or maybe your uncle, or what is it, Craig, your brother's sister's boyfriend's ex-girlfriend that works in the cubicle next to you, something like that. So not to be cocky or brash, but really we spend all of our days helping others like you. So we know about loan programs and guideline changes. We know your markets. We know what it takes to sell a house. We know how to help buyers, whether it's their first home or their 10th home, really just make it a memorable and a great experience. So definitely lean on family and friends for feedback and maybe a little bit on their experience. But we really like to position ourselves as industry and market experts. And really, we kind of hope that you come to us to really make that final decision and help us guide you through buying a home, financing a home, and selling it.
Yeah, and in a lot of cases, it's the biggest financial, emotional decision people make. And, instead of listening to people that aren't in that position, that aren't looking to buy or sell a home at this time, their opinions are relevant. This is what we do every day, all day. So that's why I always say, just, try to trust the experts and get your data from the right people.
Well, and things change so fast. We watch it every week, so we know things change so fast. So what was good advice 6 months ago may not be good advice today.
Correct.
And just ask. If you have a question, just ask.
Yep.
Yeah, we're all fairly approachable. So
at 480-354-7344, you can reach out to us. We're here. So we have had a lot of questions on the NAR settlement. And so we do want to bring that up and chat about that. And the changes went into effect earlier this month. And so what are those changes, Craig and Twyla?
I think the biggest one for buyers is now having to sign a contract or work with an agent, even to view a home. I think that's probably going to be the biggest challenge for our industry and for the public to get used to. At least from my perspective, that's kind of what I feel. Twyla, how do you feel, or what do you think?
No, I think that's definitely it. But I think it's the conversation we have up front. I think before it became the rule, we've all practiced it and been talking about it for a really long time. So now when I'm having those conversations with people, it's going much smoother than I thought. But it truly is. You can't just go, we can't just go on a sign call and go show a house now. You do
Right.
have to sign an agreement, even if it's a one-day show agreement for that particular house. But unless it's an open house, that's going to be your only way of just looking at a house without signing some sort of an agreement with an agent.
Yeah, we try to
Well,
have that conversation up front and let people know, hey, just so you know, we're going to have a document that you're going to have to sign. Unfortunately, it is a 3-page document, which just drives me nuts why it has to be a 3-page document. We didn't write it, folks, just so you know. But it, just to let people know, hey, you're going to have to sign this. I like to send it to people ahead of time so that they have time to read it and know what's going on. But it's it's something that we've got to do. Real estate agents do get fined if they don't do it, and if it's in the thousands, by the way. And if they don't do it enough times, they lose access to the MLS.
Well, and I think that, it's important now. This is why, again, showing and being able to demonstrate your value as an agent as to why you should sign with us or sign a contract with one of our agents, because of the experience and dedication and things that we do to make the transaction smooth. From the seller's side, right now, it's kind of open in terms of buyers right now. Most of the time, their agent is submitting a form that, is asking for how much cooperating compensation they would want. And so as a seller, then we just look at the total net of the offer. So bottom line is the way we get there is different, but the changes aren't really, the process is different, but we're going to have the same result.
Absolutely.
Now,
and I think once we just all address the new system,
uh-huh.
and everyone, I think it makes agents maybe more educated. Maybe we'll lose some agents out there that haven't taken the time to explain their value and gone through the steps of how we earn our money and the value that we do provide to people.
Yep.
Yeah. And one of the things that was in the settlement was that, people were kind of mistaken that there was a one absolute commission that was all across the country. And I think the number that was thrown out was 6, that everywhere that was what it was. And it's negotiable. And people ask,
and it's always been negotiable.
It's always been negotiable.
It's always been market dependent.
It has been, and it has changed. And before August 1st, when they took the figure out of the MLS, now we can't track it at all. We can't even see historical, but we did dive in there. And so for the 90 days prior to August 1st, just so that people have a figure on what things looked like, really it was kind of all over the place as far as where it was, but it really did hover right around 2.5 for the commission paid to buyer agents by the seller, both on closed and on active. And so it was kind of trending upward on more on the 2.5.
Yes.
As it was, when we look between closed and active.
Yes.
But
as the market shifts more into a balanced market, that's what you're going to see. You want to separate yourself from everybody else. And so you'll start to see more of that.
But if people have any questions, this is a great video that we did with Rick Collins, one of our top agents on the Klaus team. We did this just a couple weeks ago on the State 48 Homeowner Podcast. You can jump on, if you are on YouTube right now, it is on this channel. If you're on Facebook, you can head on over to the YouTube channel later, or you can scan that QR code that's on the screen and go check out this video. It's don't sign the new buyer agreement without watching this, but we do walk through exactly what the NAR settlement is, all the changes that took place, and we dive in with a little extra detail than what we covered on today. So Craig, why don't you talk to us about the local market here in the East Valley?
Yeah, so this is for the entire MLS, basically from the Cromford report. In August, closings just under 6,000 that were down 9% from July of last year. I'm sorry, I should say July closings, but down from that. And then they were down 9.5% from last month. So overall volume is down. That's been happening, and we're starting to see inventory increase a little bit. We had, and then it kind of dropped again, and now it's starting to increase. The resale median sales price was up 1.1% year over year, unchanged from last month. The average sales price was up 5%. We're currently about 3.5 months supply, so we're moving real close to a balanced market. Some of the areas in the valley are. The average days on market is 82. It's been pretty consistent with that. And that quote is kind of just talking about the difference between, this market and say 2008, and why all that stuff is not going to happen, and why the crash won't happen. So if you want to move to the next one, and this is kind of just the overall thing. So as of September 5th, we had a little over 18,000 homes on the market, just under 7,000 under contract, and just over 5,600 sales per month. Again, month supply is on there. Average listed sales price is right around 97.8 for the value, or for the valley. The average monthly sales price is right around 579. We kind of broke it down for 85209 and 85212. So that's next. Scott, are you doing that, or is that me? Oh. So that's 85209. So you've seen active inventory kind of stay the same there. Listings under contract as well. Sales per month down a little bit. Still doing all right, 2.3 months supply, so still doing well. And then 85212, we'll see that active listings gone up a little bit, not a whole lot. And everything else is pretty low. There's still some new builds in 85212, and the new home market has been doing very well and carrying a lot of the market right now. This one I saw today that I just thought, how much does home ownership mean, and how much does it mean over time? And home prices up 58.4% in the last 5 years, over 319% in the last 30 years. So just something I wanted to share just again about the value of home ownership.
That's pretty astonishing to look at the last 5 years.
Right.
Incredible.
And one of the things that comes up still is some concern about foreclosures. And, we started to see a little bit of an uptick in the valley. I said a little, I think we had 100 right now, which is nowhere near anywhere where we're at before, but compared to the past, you're going to start to see headlines and things on that. In the next slide there is the mortgage-free homeowners. Sorry, I'm not sure how to do it. Oh, that's one of them. There should have been one above it.
Yeah, there's one in that.
This is something I just thought was interesting, that and it's actually right around 39% right now are homes that are owned free and clear. If we go down to the next two downs from that, the pie chart. Yeah, this is it. So 39% own their home free and clear. Another 30% have over a 50% equity. And so you're looking at about 70% of homes have at least 50% of equity.
Well, like that previous thing said, though, if you've owned it for the last 5 years or so, if you haven't pulled money out, you should be in that percentage there. So,
correct.
And a large portion of it is during, for almost a 2-year period, you had 1 out of every 4 buyers was a cash buyer or was a cash transaction, and they paid cash for the home. There was no financing involved. So it's helped tremendously. It really adds to emphasize Craig's point that the foreclosure worry, the wave of foreclosures, the second coming of the housing crisis or crash, just not apparent in any of the numbers, especially with that much equity in most homes, because banks aren't going to foreclose. They're just, people can sell their home and get out.
And that's the key too, is people need to be aware of that, because we're just not seeing, we don't want people to not take advantage of that and have somebody have it foreclosed on to lose all that equity either.
Well, and that's where we're saying, ask us a question. We are all very non-judgmental. I think sometimes we've talked about the easiest way to deal with a problem is to not deal with it. So by the time we get the phone call, they're already in that really close to foreclosure process. So if you're in that, like Steve said, your debt ratios and things like that aren't working, let us know. He might be able to help you refinance, or we can help you sell it before you get foreclosed on and at least recoup some of your money you have in there.
And this, how this impacts the market and what it would mean for, say, buyers and sellers is just to understand that we're not going to get a flood of inventory of foreclosures. Inventory is going to remain tight. And with rates having come down, I mean, to the average of under 6.25 today, your FHA in your 5.75 range of that, I think we're going to see, again, the fourth quarter be good. And it's not something that we're not going to get a flood of inventory from foreclosures or anything like that.
No.
All right, this kind of be the roadmap to selling in this market. We have here the pricing, presentation, and participation. I would add patience to that one in this market. Right now, again, with the average days on market being higher, we're seeing more listings sitting a little longer. We're seeing more price corrections, things along those lines. And I think it's important to understand, read the market, understand that days on market aren't as important right now as number of showings. So when I talk about pricing, it's being competitive, it's presentation, it's being, show ready, move in ready, that type of thing. And then participation is, you got, as a seller, if it's occupied, being involved, allowing for showings, making sure it's ready for showings, because we're going to have less. And so we need to make sure each one counts. And we kind of put together this roadmap to help kind of walk you through. One of the things that we try to always do is end with here's what's next, so that the next steps at all times. I communicate with my listings once a week, and just communication is key right now as listings start to sit. The good news is, in my 21st year of doing this, I've been through this before and much worse in terms of days on market. And so we have different strategies and different things to do. It's not something where I've been in the business 5 years and all I know is a seller's market and what do I do when it doesn't sell in the first weekend? That's something we've been through and we understand, and it's setting that expectation up front that it could be your second showing, it could be your fifth showing, and we just don't know when those will be. But just understanding that, and right now homes are still selling, like I said, just under 6,000 last month. And so if it's priced right, it presents well, it should say it will sell.
But it's the patience. We've all, in the last couple of years, what we've seen, things move so quickly. So to sit on the market right now, people feel like it's forever. And we're like, this is going back to kind of a normal market, right?
And we do. I mean, as agents, you're like, oh, it didn't sell that first weekend, or we didn't get a showing this week, or something. But understanding it's just the market. I mean, there's fewer buyers right now. Even with rates coming down, we can get more into the Fed later, but there's a lot of belief out there that when the Fed cuts rates next week, that's going to lower mortgage rates. It's already happened.
Right.
So sorry, Stevie, were you saying something?
So
no, absolutely.
Let's talk about rates.
Let's talk about rates.
Yay! Well, finally, it's not as touchy of a subject anymore. So let's talk about rates, man. I mean, really, just the purchasing power and activity is really starting to pick up. We've actually seen rates, based off of today's market close, your average 30-year fixed closed today at about 6.22%. I'll get a little bit more detail what that entails, but really what's happening right now is more buyers are able to come to the market. And again, a lot of these numbers are going to be national and on averages, but according to the Mortgage Bankers Association, you've got 5 million plus potential home buyers become eligible with every 1% drop from the previous rate highs. And so October of 2023, we hit about 8% on average for a 30-year fix. And we hit 7%, and now we're 6%. My camera just went.
Well, and it was like 7% at the end of July or middle of July, I believe, when I was looking today. So it's come down quickly.
It's come down tremendously. So we're really, it's really just kind of increasing the buying power, bringing more people to market. Again, speaking of the Fed, we can kind of go to I can't see any. Sorry, guys, I've lost my screen went black, so not quite sure what happened. But
the slide is the market odds on Fed cut.
Okay. I was just going to say, what's happening next, Steve? Come on.
Yeah, if you want to click on the link again.
Okay, so basically, you're talking market odds in the Fed rate cut right now. I mean, we started the year thinking that there was going to be, this is the chart thinking what was going to happen in 2024. And as you can see, we haven't had a reserve rate cut yet until September 18th. So that's going to be the next cut. That's next Wednesday. It's going to be at least a quarter. They're now starting to hedge that it's going to be a half point cut. The Fed's going to get really aggressive. I don't know that that's quite going to happen, but there's a 100% chance that their Federal Reserve is going to begin cutting the Federal Reserve rate on September 18th. So what that really does for the market is mortgage rates already kind of have priced that in because Powell's already kind of led the charge. We know there's going to be a cut. So it's already been kind of priced in, but now what the market is starting to do is look at other economic indicators going forward and how many more cuts is the Fed planning on, or are they anticipating? And right now, they think, the market is anticipating that the Federal Reserve is going to cut once in September, another quarter point cut in November, and then a quarter point cut in December, and then 4 to 5 cuts in 2025, which, that being said, would bring the Federal Reserve rate into that 3.5% to 3.75% range, which would then bring mortgage interest rates into the low fives on a 30-year average, bringing us down almost another full point. What happened?
Now you're at mortgage rates and individual borrower effects. Yeah, I looked it up.
Oh, sorry guys.
Yeah, July 22nd, they were at 7%.
Go. Yeah. So mortgage rates and individual borrower effects. So this is really what affects mortgage rates, guys, is number one is going to be your credit score. The second thing that affects is the amount of down payment that you're going to put in. The loan term, 30, 25, 20-year, 15-year. Usually the lower the term, the lower your interest rate's going to be. Mortgage product can have a lot to do with your interest rate as well, as Craig alluded to. Most of the advertised rates that you see or are posted in the news are going to be your conventional Fannie Mae, Freddie Mac 30-year fixed note with a 760 FICO, 20 to 25% down, and a purchase loan. And then the property type can also play into your mortgage interest rate as well. Credit score, obviously, the biggest parts that make up your credit score is going to be your payment history, length of credit history, types of credit you use, any new credit, and then the amount that you owe, the kind of mortgage that you need, conventional rates, again, usually what's advertised, your government loans, FHA, VA, USDA, are going to be lower because they're going to have sometimes a higher PMI factor and they have that supplement of the government funding. So, and then your jumbo rates. Jumbo rates are probably going to get more aggressive as the Fed starts to cut interest rates, as well as adjustable rate mortgages.
What's the minimum? Oh, go ahead. There you go.
No, go ahead. So the minimum down payment.
That was what I was going to ask you.
Yeah. So the minimum down payment for conventional loans is 3% for first-time home buyers, and a first-time home buyer is defined by Fannie Mae and Freddie Mac, somebody that has not been on title to a property in the last 3 years. So if you sold a home 5 years ago and have been renting since then, or kind of job hopping or moving around the country for your work, you can be a first-time home buyer once again. Typically, we'll see 5% down. Jumbo is typically 10% to 15% minimum down payment. FHA is 3.5%, and of course, VA and USDA have no required down payment. So really, when you're planning ahead, I always try to tell clients, like when you're planning ahead for, your perfect mortgage application, is really just kind of understanding, your income, hourly salary, how much you made, even just last year, year to date, if you got a raise, assets, where your down payment sources are coming from, all the statements and deposits, things like that. I can walk you through, and having an idea of your credit. Really, there's so many free apps out there now. I encourage clients to utilize Credit Karma, Experian. A lot of our credit cards actually have that free service as well. So take a look at that. But any questions on getting prepared to buy a home, call me first, because that's really where I'm going to be able to help you get ready over the next 30, 60, 90 days, whenever your timeline is, to get you ready to be successful.
That's important too, because you've sat down with people and, it's giving them a plan, and maybe it takes 3 years, but then you get to help them with their first home purchase, and because they followed that plan versus trying to do it on their own.
Correct. Yeah, 100%. 100%.
All right, let's talk about the predictions. So the experts are saying the mortgage rates are going to come down. Steve.
Yeah, I mean, absolutely. Mortgage interest rates are trending in the right direction, and they should continue to trend in the right direction, regardless of, what happens in, the upcoming election. All the economic trends are really kind of showing us that this is where rates are headed. Again, obviously you're going to see the Mortgage Bankers Association going to be a little bit more aggressive looking ahead than NAR, but they're right in line with Fannie Mae expectations that we'll finish next year somewhere in the 5s, and depending on how quickly the Federal Reserve cuts interest rates, or if they make any larger cuts. So it should definitely be helpful for home buyers going forward.
And that's hard to predict, because if I don't think anybody, even you, would have said July 22nd that by September 10th we'd have 6.22 rates when it was 7%.
No, absolutely not. No.
There's so many factors, it's really hard to predict. This, as far as home sales for 2025, these are some of the kind of Fannie Mae, Mortgage Bankers, and NAR's prediction. This is be the 3rd year in a row that will break the record for the least amount of home sales. Because it was 2022, then 2023 broke that. Now 2024 will break that. We expect that to change in 2025. There's been a lot of buyers sitting on the sideline for a long time. There's been a rate lock effect for sellers, because when they were 8% and they're sitting on their 3%. So we expect that to change. And I think locally it could be as early as the 4th quarter, and potentially, if not, into the early part of the 1st quarter. I think we're going to really start to see activity and transaction counts pick up as more buyers enter the marketplace.
And then we see home prices coming up.
Yeah, and home prices, again, this is nationally. I think we're always typically outpacing nationally. I think that the first half of next year we're going to get a majority of our appreciation, and we'll see. I think it's going to be higher than what they're showing here of the average of all 10. Again, that's nationally. I think locally we'll be closer to the 4 to 5, or probably 3.5, 4 range.
But it makes sense if interest rates are coming down as we anticipate. All those buyers that have been on the outside for the last couple of years are going to be jumping in, which we would expect then prices to go up, right? Supply and demand.
And that's why all the buyers that are jumping in now or have jumped in recently are going to be ahead, because they can just refi when those rates come down, but they've already started building that equity. They had got in at a time when buyers have negotiating power, more choices, more opportunity, versus waiting for everybody else when rates come down to jump in and try to compete with that.
All right, we got a question from YouTube user looking to refi. Do it now or wait?
I mean, really, it depends on your personal situation, where your interest rate is currently. Are you looking to do a rate and term, cash out refinance? I mean, I would tell you the first step, give me a call, reach out to me. But, when I tell people, when they say to wait, it's okay, well, what rate are you waiting for? Because if they're like, well, I want to wait till rates get in the 5s, as we alluded to, that might not happen until the second half or the latter part of 2025. And as Craig mentioned, there's so many things that can happen between now and that time that there's no guarantee that we'll ever get there. So waiting isn't always in your best interest, depending on where you're currently at and what your personal situation is.
Well, and I think you just said it there, your personal situation. You and I have talked to people who need to refi now for specific reasons, right? So we've talked about people who maybe have a lot of debt. Maybe now is the time to get rid of those credit cards that are at 10% or whatever, not even 10. What are credit cards now? I don't even know.
20-something%.
Yeah, 24%. Yeah.
So, you know, if you're refinancing to pay those off, that still might be a good move, right?
Well, compared to HELOCs too, I mean, you know, if you go from 3 to 6.25 or 6.5 or even whatever, but it goes to 10% or 11% on your HELOC, there's a
Right.
difference there.
There's a big difference. And
Well, call
again,
Steve. That's the answer, right?
yeah, it's definitely something to consider. But yeah, it's always personal.
Ty wants to know, what does this all mean for buyers and sellers?
Well, I would say if you're a buyer, getting out now is a great time, because as we just talked about, it looks like next year things will be picking up, prices will be going up, interest rates will be better. So why not get in now? If interest rates go down, refinance then, but you're ahead of everyone else who's waiting for those rates to go down. And we get into multiple offers and going over appraisal and waiving inspections and anything like that again.
From the seller's perspective, again, it's patience, but I always say the right time to sell is when it's the right time for you. Trying to time a market like this has never been successful. And I think that if, you know, we know what the market is today, I don't know what it's going to be like in 90 days. We have a good expectation, but we don't know. So I know what it's like today. That's how I would answer it, is when you're ready, you're ready.
Right.
So let's talk about assumables. So this is an opportunity that's on the market.
Yeah, I can do that. Sorry, am I muted? No. So assumables are definitely out there. We have a couple of companies that we work with to advertise your house on if you have an assumable. If you have an assumable mortgage, when we list your house, we definitely want to market it, because the idea of someone coming in and buying your 3.5 versus paying a 6 or 7, whatever is out there now, could be really beneficial to them. So it's a huge advantage to the buyer coming in to buy yours. They might be able to buy a little more house getting that rate. There's some hoops to jump through, but these two companies that we work with have made the process easier for sure, for the seller and for the buyer to kind of help work as that middleman to get things done with the banks. I haven't done one. I'm hearing 45 to 60 days. Is that kind of where we're at?
45. Yeah. If they go with a good company and have help. Yeah.
Yes.
We're going on.
Well, that's why those companies are definitely beneficial. Oh, sorry, Craig.
Yeah. I'm going on about 110 days on one, but it's Freedom, and that's one of the tough ones there. But you have to be FHA or VA at loan, and there's some restrictions and differences with VA, and we can cover that individually with you as far as whether that's a good thing for you or what that all means. But again, only FHA and VA, and then USDA loans. Typical conventional loans are not assumable.
Well, and I think with the FHA loans, I know I had a client tell me their provider told them it was not assumable. And I sent them to one of our companies and they found out, oh, yes, it is. Most of them are, but obviously your mortgage provider may not tell you that or may not want to be super excited about doing that. So call us. Again, we can put you with the company and get them to work it out for you.
Yeah, we've seen some that the loan might say that it's assumable, but then the servicer doesn't want to.
Yeah, because they're not making money on their new loan, and it's not a whole lot different than when the short sales became a big thing, where they just weren't staffed for it. They didn't have the departments for it, and that's what these two companies we work with help kind of fill the gap in there.
Yeah. And I think one thing we look into, if you bought the house in the last couple of years, it's not a big deal. But if you bought that house 5 years ago and we looked at you have 50% equity now, or whatever the buyer that comes in has to figure out how to pay that difference. So that some people shy away from that, but there's definitely some options we can talk about for that also.
But that's why we say it's a time machine.
Yeah.
You have to go back to those old rates. So let's talk about buy then sell.
Yes, this is a phenomenal program that I think we're going on about 4 years now. We've had that we wish we would have had 15 years ago. This is an opportunity to take advantage of your equity and buy it, to use it as a down payment to buy your next home first, qualify non-contingent, be able to buy whether it's a new build or moving out of state or to buy another resale. You're using your own lender, whether it's Steve or if it's a builder, it's the builder's lender. It's a phenomenal program. I've used it myself. My son used it recently, done over 60 of them. I've taught other agents about it because it's a phenomenal program. If you are looking to sell and buy another home and use the equity as your down payment, this eliminates your need to do anything else, take out a HELOC or try to qualify for both. And there are some things that go into it too, and that's something we just sit down and talk about and see if it's an option for you. But it's been phenomenal with builders because you get the builder discounts, and you don't have to put your home on the market early with the contingency. For moving out of state, it's a huge relief because you can go out there first and buy and know exactly where you're going, so you're not moving twice. Phenomenal program, so just reach out to us. I'd love to tell you more about it.
And there's a lot of options for home buyers. People want to reach out, you can just reach out to us at klausteam.com/first-steps.
So the first steps, obviously, we've kind of talked about. We work with great lenders like Steve, right? Because we want to find out what you can truly qualify for. The last thing we want to do is go look at houses and find out you don't qualify for that. We found your dream house and it's outside of what your budget is. So let's talk to Steve, get everything in line that we need to do. I love our buyer consultations, which I've always done. So this NAR lawsuit just really made us go, okay, everyone needs to be doing these now. Let's sit down, let's meet at the office and go through what's important to you. Find out what your criteria is. What area of town do you want to be in? How many bedrooms do you need? Is a 2-story okay? And fit it into your budget. Then we can go do the fun stuff, right? We have the pre-qualification. We know what houses you like. So we start that whole process, negotiate through it for you, get you the best deal that we can. And sometimes we've said, sometimes the deal is winning the house, right?
Right.
And then moving on, I just had a buyer consultation a little while ago today, and I was talking about all the steps for the buyer of a buyer inspection, loan contingencies, all of those things in there. So there's a lot that happens in that escrow period, but I think the home inspection is super important to do. Moving on from there is keeping in touch with your lender to get us through the process.
Yeah, and I think that as a listing agent, and so I can tell you that when we get feedback where on a house that doesn't have a pool and the feedback was they really want a pool, that's an agent that didn't do a buyer consultation and they're so excited to have a client, they don't take time to ask questions and they're just out to show them everything that they ask to be seen. And I think that's one of the biggest differences that we always preach is try to just keep asking questions, try to dig deeper and find out motivations, find out what's really important. And I think that's a big difference. And I can tell you from, having 7 active listings currently and doing a lot of listings that it's not common. I mean, there's agents that open the door and let the buyers walk through and hope for them to tell them that they like it or not. They don't ask questions. They're not trying to solve problems. Like if you have a house with, it just needs interior paint and they love everything else about it, and you just put them back in the car and go show them the next house that's an easy solution, right? I mean, why time is valuable and all of that. I just want people to be able to solve problems in that. And I think that's what the buyer consultations that we do help.
Yes. Well, you're putting it all out there up front, right? I always joke and tell people you're not going to not buy a house from me because of carpet or paint or counters, because those are 3 easy things to fix. I can't move a house. I can't put the backyard facing the other way. I can't, move this house to that neighborhood, but I can help you get new carpet or new floors and new paint. Those are all very easy to do.
and estimates and things that are easy. We've been doing it long enough to be able to kind of on the fly know what, price per square foot paint is and be able to get an idea on that. And those are things, like I always say, as a listing agent, I can't count on buyers agents to know. So we have to do it, because if we leave it for them, it's just going to be more of a challenge. So I think, again, just, making sure that your agent is asking questions and has your best interests at heart, and doesn't be afraid to tell you, hey, that's not one you're going to want to look at. It's not the floor plan that you want. Saves everybody time.
Well, thank you, everybody, for being on the live stream. And if you have any questions, you can reach out to us at 480-354-7344.
This episode is brought to you by Klaus Team Real Estate Solutions, powered by Real Broker. At the Klaus Team, we're focused on making sure our clients have the most solutions, the solid representation and risk mitigation they deserve, and an incredible experience from day one. For us, it's about 2-1-2. At 211 degrees, water's hot. At 212 degrees, water boils. Boiling water produces steam, and steam can power a locomotive. It's that one extra degree that makes all the difference. At the Klaus team, we go the extra degree to make your real estate journey exceptional before, during, and after your purchase or sale. For us, it's not just about a transaction. From buying your dream home to purchasing wealth through investments, our 212 experience ensures outstanding service every step of the way. But don't just take our word for it. Check out our client reviews on Google or at klausteam.com/reviews. We're Klaus Team Real Estate Solutions, your real estate partner for life.